years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to go through what I think is the absurdity of everything that we're seeing when it comes to government reports and the lack of credibility. Let's get into tonight's video. Well, welcome everyone. I'll wait a few minutes till we start to get some folks signing in. I've got a couple announcements tonight, but I'll start off by just discussing what I just thought is ridiculous. And when we first heard that we were not going to get the October numbers, when the government was shut down, I thought, are we going to have a blank spot? Are they going to leave an open space in the column? And that's what they decided to do. But always remember, what was Emmanuel, one of these guys that said, never let a crisis go to waste. And they didn't let this one go to waste either. One of the things I know I get on these themes, I get hung up on stuff. I'm old, so I get to do that. But, you know, this whole government shutdown thing and the lack of credibility that it continues to basically let us all see behind the curtain. You know, a buddy of mine on trading floor, whenever the arbitrageurs would come in, the arbs would come in, the trading pit, he'd always say, do not pay attention to the man behind the curtain. And that's what they're telling us now. I saw some pretty funny comments, I think on Bloomberg earlier, somebody was calling it the Swiss cheese reports. And what that is there was all kinds of data missing. Not only did they not compile October's data, they just almost aren't compiling anything right now. So the whole system appears to be broken. I know I've been on this theme at how good things ran when we didn't have any government reports and we weren't all here trying to be macro economists. And that's kind of what they did to me over many years of trying to figure out some of the games that were being played. And we're just seeing a whole next level. The amount of inaccuracies, things that we've always seen, you know, especially I think earnings are also a joke to a large degree. I'm not sure what we're actually trading on anymore. I mean, we used to joke about smoke and mirrors, all those type of things. But the reality is that's kind of what we're doing. I mean, we're kind of guessing at everything. And another one of my mentors early on used to say the only difference between this was when I was at a brokerage firm. Only difference between a brokerage firm and a casino is we wear different garb. We don't have the little bill hat with a little clear bill on the top. You know, we wear suits and ties and all that. And that's pretty much what we're getting anymore. It seems to me, and I think that the Bitcoin folks are feeling it the worst. And I've got something that I think I've figured out what might be going on with Bitcoin right now. So I'll do this also in the front end and maybe discuss it when we go through Bitcoin. But the entire arena that we're looking at are just really funny. So what did they do in this last report? So no October, you did CPI. They're giving you September to November. And that is perfect, right? Because they took there's a blank spot. So if you're looking at the returns between the 3 months, it's really 2 months. You're probably getting a 0.1, maybe 2 downtick because there's a blank number in the middle. And they're saying it's for 3, but it's for 2. So a little smoke and mirrors going on there. And, you know, so markets, as always, they responded to this. I talked about last night in the analysis is that we were trading on the S&P right on that 10-week moving average, just below it, and we should bounce off of that. And we did in a fairly big way, but it got real sloppy at the end of the day. So I think this is maybe market participants, smart money, whatever you want to call it, actually coming in and realizing that, this thing probably wasn't as good as they said it was. And, you start getting, now it's lower rates and all that stuff. So I'll be glad. I'm hoping that there's something that gets revealed, that just because rates are low doesn't mean the economy's good. We happen to live in a place right now that it's almost impossible to probably have a recession. Now, having said that, now we're going to have a recession, right? That's how that works. But the reason why I say that, with all the CapEx that's coming to the market, everything that we know that's coming, it's, I think maybe the administration, maybe everybody kind of, if you listen to what people are talking, I'm anxious to see with what I'm going to come up with when I work on my annual outlook that I'll be starting on next week, and have it out. I will have it out by year end, just to what everybody's going to come up with. I mean, what I'm seeing right now in a few interviews that I've seen is everybody's like, well, we're going to be more of the same. And this is also the theory that I've been throwing out there, from the standpoint that, I said we could get maybe 5-6 years back to back to back of double-digit returns. We're looking, unless there's some big disasters happening. Right now we got S&P is up 15.2, NAS is up 19.1 on the year, Russell's up 12.5, and the mid cap is 6.4. And I remember early in the year, I thought the mid caps would do a bit better than the Russell, and it turns out there's so much focus on the Russell because people keep predicting these big rallies and all that. And like I showed you last night, the Russell's the only index that is actually forecasting lower, while everything else is still forecasting higher. So I'll try to break this, kind of come up with a conclusion. And what my point of talking about this is that I don't, there's the old saying, no one knows what's going to happen next, and we don't. I think I've been talking about off and on over the last couple of weeks that I just feel like there's something not right. There's something missing. I don't have a feel for the macro like I usually feel like I do. And I always look for, if I'm picking up biases along the lines of things that I watch. So we all pick these things up from our environments, no matter whether you're on X or Bloomberg, CNBC, Fox Business News, whatever you're watching. We all pick up these little things, and we tend to agree with the ideas and things we have. We kind of migrate into a path. It doesn't matter who you are. I try to look for those things. I've had some pretty good success in picking up with all of a sudden I'm starting to lean with the crowd. Not that I need to be contrary. It's not that. It's like, how much of the outside bias are you picking up, and that is influencing you? There was somebody had valid questions, valid points, about Bitcoin. Somebody said no one in that held Bitcoin more than 3 years has ever lost money. I saw that, I think, in a YouTube comment last time. That might be true, but you're talking about a market that's, if it's going to be this thing that's going to form into this long-term asset class, which I'm still not convinced that's the case, could be, and right on if you figured it out early. But what I'm saying is, 4-year cycle on a market that's been around 16, 18 years, 4-year cycle, really? How do you determine that? I mean, you got 18 years. One of the things, like if you look at our WaveTech models and you use our portfolio manager, you have to have at least 4 or 5 trades to get enough trades to try to start to build any statistical significance. I've been a quant for a very long time, and you're talking about an 18-year-old market, and you've already figured out 4 years cycles like it's perpetual machine. Come on, seriously. You're obviously pretty young, probably a millennial, been around the markets for 5 or 10 years, think you're an expert. When you start to look at more in-depth statistical numbers, you're not going to get to a material place. And unfortunately, this will all come together here. This is what we're seeing happening with government statistics. A lot of these stats have been around for a long time, and you can start to build some normalcy around them, even with this sloppy reporting, whether it's intentional or just substandard collection methodologies. So when you start really digging into the math, digging into the numbers, there's a whole lot of questions come up. And for whatever reason, and now I'm going to sound like the old guy that's been on Wall Street a while, which I have, is for whatever reasons, it appears that some of the integrity of these numbers and how much they're cared about is slipped substantially, or it feels that way. I don't know. It's sort of like I flash back to early days of my career in the 80s. I started in 79, and it just seemed like there was more scrutiny and more folks to ask questions. Anymore, it just kind of flows back and forth, and you can really see it in the Bitcoin community right now. Man, they have no clue. So so this is my question about the numbers, and I've been questioning since we got that crazy revision on employment last year of almost 1 million jobs, and we had, I think, 600 this year. It's better, but still not very good. And I keep thinking if we can get, I believe very much on the blockchain, that getting things on the chain, getting more realistic, more real-time stats to look at for us to make our decisions would be really welcomed. If we actually knew what was happening instead of what we were told, and then the revisions and all the mistakes and everything. The data is so sloppy. It just seems to me, they don't seem to have that trouble calculating our bank accounts. It's not very sloppy. It seems to be selective, almost like not selective editing, but they're just selective on how well they do some things versus others. And I think it's for a reason. So enough of my conspiracy. So let's talk about Bitcoin. I think something has occurred, and some of you will know, possibly that are watching this, will know better numbers, but I feel like the liquidity is gone. Now, you folks have seen me talk about the order book and things of that sort, and you'll see, me talking about how the order book is emptied out and it's very illiquid, which causes prices to move wider. So we've seen some of these. Yesterday in Bitcoin was pretty good. We spiked all the way up to almost 90,000 again, then right back to 85. Not sure where it's at the moment, but when you see price movements, there's two things I want to talk about. So we'll make this little mini class on price movements and things that happen. But when you see price spikes and they go up and they collapse back in, the collapse back in tells you what side of the market has the most power. So lately, we know that it's the short side of the market, and once prices rally up and they get hammered right back down. But the other thing I believe that is happening in Bitcoin is that what you're seeing is the bid-ask spreads start to widen out. I watched some trading earlier today when the market was turning around, and you started to see the spreads increase, and the volume didn't seem to be there. And I always talk about the aggressiveness of the buyer or seller that causes markets to move. But here's what I think is going on. Could be wrong. Some of you know this market better than I. I look at charts and see numbers and things moving. But I think what's happened is because the price is going down there's more hodlers than there was in the past. So what's happened is people are going, well, maybe if I don't do anything, I don't respond, it'll get better. And it's actually getting worse from market conditions because there's a lack of tight bids and asks to offset the surges of selling. So the selling is where the spikes are coming from on the sell side, not necessarily people getting short, but the sell side is the powerful side of the equation. And fewer people are starting to pull this up. And then you see folks trying to tie interest rates in Bitcoin, and lower rates mean that Bitcoin's going to go up. It doesn't. It doesn't have anything to do with anything. But what does have, what I'm talking about here is when the markets thin out like this is where you start to see certain types of actions you don't see. You're looking at somebody that has set, what is this, probably 30 plus years. I have probably missed less than a month of days of live ticks on my screen. So I've watched price movement. I study order books constantly in the way that I trade. It also helps me in making a lot of decisions on price movements because of the activity that's happening and how these shifts and how these ebbs and flows happen. For somebody, there used to be this entity person on Wall Street called a tape reader, and that's what tape readers would pick up on. I was at the tail end of tape readers existing, and there was a guy that used to hang out at one of the brokerage firms that I worked at in California in 1979, and he was a real good tape reader, and I had got some time to spend with him, and that always stuck with me. That's always been why I watched the order books. That's why I guess what influences me a lot, especially in the shorter term and intermediate type movements, that when you're getting into patterns. Like we have been, to tie this together, and hopefully I'm making sense for you folks. This is why I study the order books, why I look at the patterns, one of the things that I noticed every day, we all notice it, that if you look at a bar chart, I don't care if it's a candle or whatever, is that if today's range, this is why I built the market grid, today's range is whatever value, the next day typically will overlap some portion. If it's trending, then the tail won't go very far, maybe down halfway of the previous day bar, but they stack up and trend. So that's why you get the bar formations like you do. So that's why I worked on coming up with something to predict where I thought the daily bars were going to be, meaning how are they going to overlap the next day. And that's why when I ran the data sheets already, and I'll bring that up. Matter of fact, I'll bring that up just to tail this off. I'm going to go for a few more minutes on this because as we close out year end, all these flows start to change too. But the whole idea here is that each bar overlaps, and when they overlap, you can start the next day's range. Predictability, they typically will hold similar type patterns from how many points it moves in a day. The overlaps, a lot to do with my PPMs that are in the indicators that you can tell by the indicators. PPM stands for price, pressure, momentum. So when we started studying all these movements around moving averages, daily price movements, all of that, what we were looking at there was there any elements that we could put a higher probability on the stack of the bars for the next day because of that price, pressure, momentum, or the angle of attack. All this stuff comes into one. It's all one theory, and the point of this is if you're trading like I do and you're understanding trends, that's why you look for those things. I saw somebody, and this is still on Bitcoin, the illiquidity. What's happened right now is you're seeing these big spikes intraday, just like an hour change from 89,000 back to 86. So, maybe an hour. So I saw somebody post, what kind of formation is this? This is called random walk. There is no formation. These are a range that the market can move randomly within these ranges. That's why you're seeing the type of action. There is no bias to a super positive or negative right now. We're just in that zone. And markets spend most of their time in that zone, and then they start to break out and go into ranges. And you can figure out a lot of that through the PPMs, through the price, pressure, momentum, all that stuff. But just to go back to Bitcoin, I think what's happened is the type of activity, you're getting people chasing rallies because that's it, and then they disappear, and then there's an air pocket down. And that tells you that there is a very unstable market. And, I'll go through this again later, but I'm going to put it out there while I'm thinking about it. But 83,800, you break that, you're probably going through 80,000, you're probably going much lower. But that's a number that I picked up in all this randomness. That's what, like, your key pivot number out there right now. Above it, you're safe. Below it, you're not. All right, so now that I've got a nice full room, I've got your attention. Let's just talk about the rest of the year. This is going to be my last broadcast this year. I am going to release some things that I'm working on. I want to get us set up, us as a community, and those of you who want to participate at whatever level you can. But I want to get a structure to how I'm going ahead with this channel and with some of the things I want to achieve by being on here. Listen, I'll be 74 next year, and I still feel pretty good, but this is time for me to really get a lot of things from my viewpoint. Many of you know I just had, my wife passed away, and when you go through a difficult situation like that, two things happen. One, you grieve, obviously, but the other thing, it makes you reflect on what you're doing, and that's kind of where I'm at right now. I've had, we've got, 45,000 subscribers in this channel. I think it should be more, but I don't think YouTube liked me back in the pandemic days. But the main thing that I want to achieve going forward for Bob Kindle is it 1 year? Am I going to be around here for 5 more years? Probably. I hope physically I will be, but probably not doing what I'm doing right now. So I'm going to lay that out. I'm going to try to put some videos together on my goals. I'm trying to build our community up with the indicators. I have intentions of doing a European tour and ending up in Dubai at some point next year, where I'm going to do live master classes. And I'm really working on a number of things to get this stuff out. So I just want you folks to know a couple things. Have a great holidays if it's appropriate, and your whatever religion you're in, enjoy the holidays coming up that are associated with you. And also just know that I've really been appreciative. You folks have been super patient with me, not knowing everything that's going on. The last couple of years have been very sporadic just because of what was going on in my personal life. It was quite challenging and emotionally and everything you can imagine. But going forward, I want to give back to this community, and I want to do it in a way that has a lot of integrity. And I've thought about this long and hard. I've had a lot of time to think. I'm going to continue. Also, the Substack is going to be slightly disrupted around holidays and stuff, but I'll let you know every night if there's going to be one the next day. There will be one on probably Monday, Tuesday, and then I'll let you know the schedule going forward. But I want to focus on getting all of these things set up so that you folks can participate at whatever level you have. I can get done in my professional life what I need to get done from my viewpoint, because I have so many random things that have happened over, especially the last 5 years since I've been involved with the retail community, that I want to solidify and get it in a cohesive manner so that it's really usable. So you don't have to go watch, you know, thousands of hours of random live streams that every 15 minutes I came up with these brilliant things that most people never hear because they're buried within an hour-long live stream or something like that. So those are the goals for my initial goals. And like I said, I'm going to put some things together that are going to lay all this out. So appreciate you taking a minute to do that. So let's figure out what we're going to do the rest of today. We'll go ahead and go through I'm anxious to see what happened with the database. Before I do that, I did tell you I was going to do something. So let me bring something over. I want to show you something here real quick. So I want to go back for just a minute and show you. Okay, I want to show you this. Well, I tell you, this Stream Deck has really given me a hard time here. So, so this is the daily sheets, and this is what I built into these sheets. So if you get to Substack, it's kendallreport.substack.com. You know about this stuff. What we're looking at here is. Caution, target structure shifted bearish. So we just had a big update. And what's happening, I programmed this thing to think like me the most that I can. Hang on a second, this is such a pain that this keyboard's not working. All right. So what I want to show you here is this is programmed. I put about 6 months of effort into this, and I've got the next effort going, which I'll tell you about when it's appropriate. But we're looking at all of a sudden we went from having this big 1+% rally yesterday, thinking, oh, everything got better, and really all we are still in that consolidation. So it has to do with the way that those bars are overlapping and everything I just talked to you about. This sheet understands all these concepts. And it even amazes me because the nice thing is because it's programmed and we joke it's Pocket Bob, Virtual Bob, is that this is, it knows all the rules, all the things to look for when it sees them. It knows how to write them up in the script and everything. So it really is very close to almost being like a virtual Bob model. But there is a 21-page manual for this on the Substack that you can read that goes through every element on this report. But this has everything to do with what I was talking about, the overlapping, looking at all the characteristics of the markets, and all of that stuff that I just discussed with you. So hopefully you appreciate that. It's kind of a way to close out the year because it's really, I want you folks to look at my work differently. I know you want to know, hey, Bob, what do you think is going to happen tomorrow in the S&P? That's fine. But this goes along the lines of teaching you how to fish. And that's what I really want to do. There are some things that I've figured out in 4.5 decades that many of you will never figure out if you try, because this was my day job, okay? It wasn't my job that I did and I looked at things and studied once in a while. I lived and breathed this stuff, and we managed hundreds of billions of dollars. And I worked in big institutional rooms. It was like such a passion, still is. So I want to be able to give some of that back. So let's make 2026 really a special year. Okay, let's go ahead and dig into these stats and see how much. Pretty interesting. We didn't get much of a bounce at all. We got a decent update. We still got more selling than we did exits, if you look here, you'll see we had only about 225 new buys, and we had 507, we'll call it 650, 700, just rounding these numbers off, of selling coming in, even though we had this big update. And then we look at the data sheets that I just showed you, and what do we get there? We got a mix. All of a sudden, we got 3 against 1. We got 1 positive and 3 reversing, setting up even a more intense. And I'll show you here when we go through the S&P. We've got even a more intense consolidation phase forming. And this is basically the narrative last week. Last night, we were at an extreme on the downside. We've rallied back into the moving averages. Now we're back to neutral again. So it wasn't like all of a sudden we reverse and now we're going to all-time new highs and everything's wonderful. That's not how the markets are going to work, especially on the 18th of December, 2 weeks before year end, when there's too many cross currents and too many bosses to answer to. If you've ever worked in a portfolio management environment, there's a lot of questions at year end that you have to ask. How do we I won't go through the question, but there's a lot of questions that are asked. And because of those questions, there's a lot of decisions being made and how we want to walk into the next year. Because what's interesting about portfolio management working in the industry side is what you get is all of a sudden there's this drop dead day, December 31st or whatever the last trading day is, and you reset on Monday to zero, like you didn't do anything. So even though you already have portfolios in place, all the returns reset to zero on the first trading day of the year, of the new year. So everything kind of gets reset, and it affects a lot of traders, especially portfolio managers, and how they're thinking. They go, yeah, we were up this, but it's kind of, but the whole industry. I grew up in a world is like, what have you done for us lately? Great month, but what have you done for us lately? Great last year, what have you done? So everything gets reset. So, so we're seeing this type of configuration here. So we should be able to move through. Thanks for listening to me for all that, by the way. And if you want to get set up further, make sure you go to kendallreport.com/indicators24. Get the indicators. They're not going to be cheaper for a while. There's going to be a lot of reason to own them next year. So get loaded up and get the expenses on the books this year if you need it. Okay, so let's go ahead and so here's the E-minis. I'm going to bring back, hopefully, hang on. I'm going to bring back this sheet here real quick, just so we can take a look at some of the commentary. The PPM1 is still negative. That it's getting closer to neutral, but we're seeing after yesterday's close, the volume that it's talking about the current volume when I ran it. I'll rerun these sheets before you see them in Substack. They'll get rerun right around the London Open. I usually rerun all this stuff. But what we're looking at here is the R1 68.44, S1 68 even, and typically you can see the check marks here, R1, S1. That's about, I don't know what the percent of the time, I'm going to say about 60% of the time it's R1, S1. And then if there's a stronger bias, it'll be R2, S1, or if it's a bias to the downside, it's R1, S2. Bigger days, we can go all the way to RTX, the whole bit. But the nice thing is R1 is 58% probability, S1 right now, 70% probability hit 6,800. So these sheets are going to be very helpful in allowing you to to make judgments, especially if you're a day trader or a swing trader. Okay. This was interesting. So we get this big, and what it ended up, we traded all the way up to, see if I can bring this up. Yeah, STX 68, 69, we traded up to 72. So we got to the extreme on the upside. And then we closed right back into these moving averages. Yesterday, it was looking pretty ugly. We traded down, looked like we were closing through the averages as I brought up the weekly. So you could see exactly that the weekly charts were actually showing you that we were slightly under the 10-week moving average, but we also had that angle of attack that said there was like a 70 some odd probability that we would rebound off of that lower level we were at yesterday. We managed to kind of come in a bit weaker and then rally up to the STX level. So now what we're getting is still on a short term, flat line slightly down. We've got Friday and then Monday, Tuesday, and then we'll probably see volume dry up for the rest of the week, and then maybe a little bit into next week. This thing's is probably going to die, but sometimes these weak, weak tones that can come out of, well, not weak, but illiquidity can move prices up or down quite a bit. So my estimate from going forward is that we're just going to kind of flatline in a range, probably a 2% range max. So let's see here. Yeah, so we got new Fibonacci targets on the downside. These are brand new as of this moment. Just came out on the reopen of the futures. And you can see, let me bring them up over here. They are 65.53, which would be basically a retest from the lows that we had back on November 21st. And then there's two more targets on the downside, 64.09, 63.21. We are seeing a little relative weakness, but I'd still think these moving averages here, where we're going to continue to focus, kind of drifting sideways in this range. We can go all the way back to this October 20, around the 24th, 27th. And other than this spike, we've been trading in this pretty tight range. Probably that will be the case. Good news is there will be a Substack. So if you don't get Substack, kendallreport.substack.com. I'll make sure there's some freebies out there between now and then. Maybe all of them will be free if I remember for the rest of the year. But you got to sign up for the free trial to get it. So anyway, and you can get just a free version and get them when they're free. But this pattern, to me, looks pretty stable. So let's see if we can get through where we at here. Yeah, I went long and hard on that. So I appreciate everybody hanging out. All right. Let's go to the NASDAQ. It's going to be similar pattern. New fib targets down here as well. We're looking 23,376, 22,423 down here. That's a retest of this low. I don't think we do that. This is the second day for this projection. We get 3 days and the probabilities go up, but I think we still stay within the range. This red dot area, write this number down, is going to be, see if I can find it, 25,300. No, 24,411. 24,381. Let me find the right number now. Sorry, I grabbed the wrong number. Whenever, oh, there we go. No, hang on. Yeah, so we'll go with this number right here. 24, we'll call it 24,000. That's your pivot. That's probably the floor if we get down there. Okay. So everything's going to be pretty much the same there. Let's go ahead to gold and Bitcoin, and I'll come up and see what questions you guys have and go from there. So gold's still kind of flatlining here. We're still staying above the 10. Algos are suggesting we're going to see some weakness as we come into the beginning of the year. I'll flash up here silver real quick just to get some ideas there. But yeah, the 10 period moving average right now, 43, let me double check this number. Okay, 42, 45 is going to be that key number there. We should stay above that level. We should drift, but there is some weakness being forecasted as we come into early January. Okay, let's do silver real quick. Silver spiked up, went to STX yesterday. That number is 66.73, the high 67.18, came back 66.44, coming back in toward the 10 period moving average. But you can see the upward slope. I've talked about this before. We're going to likely stay above. I can't see the number, unfortunately. Hang on, that won't let me see it. The way I've got this set up, it's blocked. But anyway, we'll expect it to stay over the 10 period moving average. Okay, let's do Bitcoin. Bitcoin's trying to bottom here. We just got to reopen. Let's see what that number is. Yeah, so 83,800. Put that number out there again. That's the big pivot. We take that out, we'll retest the 80,300 and change, and chances are we're going to go a bit lower in the pattern. 69's a possibility within that pattern. The good news is the algos are all showing that we're trying to turn up, and even coming over into late December. So, and we're getting convergence of all the moving averages. So if we close above the moving averages, we'll just come up with a general number here. We'll call it 90,000. We'll make it an even number. Over 90,000, then you'll probably see some clawing back, and maybe that 80,000 number, all this will hold, and we'll see what happens from there. There's some different look. I guess while I got it up, let me just do this. The weekly numbers are a bit different. They're a bit more negative, and this downward slope of this 10 period moving average is substantial, almost a -3 whole integer, 2.98 right now. That's a big number. The probabilities of getting much over 90,000 at the moment, maybe 92, are very, very low, like about 20%. And you can see, I showed you last night, if we look at gold is projecting higher as we go forward. And then as we look at Bitcoin, everything, all the forecasts are down. Everything heads going out 2 or 3 months towards this is a weekly 200-week moving average. So everything looks different, although we're also starting to see early January, February, some bottoming type where the downward momentum was going to burn off, and then maybe we can get a further bottoming. So we're getting pretty close to that previous. Let me just give you a number here. Yeah, see, this is over here was, I think there was now, yeah, 74,000 in this pattern. But right around 80, 74, that seems to be a natural place to stabilize. All right. All right, I'll come back up. Let me look at some of the questions and stuff you folks had. Yeah, I see somebody saying emailed you, asked me indicators. Yeah, send me another email right now if you would. Info@Kendall Report, just so I can mark. And you can resend that email that you sent before, just to kind of look at that. I'll take a look at that. I thought I'd answered everything that was out there. Yeah, yeah, the 4-year cycle. Like I said, I don't know how much validity you can put on a market that's only been around a few 4-year cycles. Let's see here. Yeah, Finau, you're right about the government. Just looking through some of your comments. Give me a second here. Let's see here. Boomer working out Bitcoin. This is gold. Yeah. Yeah, listen, I'm a chart guy. I'm a quant. You know, I don't know anything about all this stuff. I don't know that anyone does. I mean, it's like a brand new market, so people are just making up stuff. So, no, I'm not sure that the downward targets won't be met. They could be. Right now, the probabilities aren't with it, so that's why I was stating what I did. Let's see here. Yeah, you know, silver's awesome. Yeah, Bitcoin probably, I don't know. I think it's a bit of a fantasy that somehow it's going to replace all the pricing systems in U.S. dollars, and probably not going to happen unless you get all new governments. Then it's possible, maybe that's happened too. Yeah. Like I said, somebody made a comment that the noise around it is biblical. Yeah. Just looking here. Yeah. So, but tomorrow's a Japanese. I have a theory, which I'll show. I'm just looking through the rest of the questions, see if anything's popping up here. So bear with me. Yeah. So let's go ahead. Let's talk about the. Yeah. Let's do something here. I'll bring this back up. So, so I've got the Dow yen up here. Dow yen looks like it's topping out to me. So I, I have this theory for what it's worth, and it doesn't mean it's when the noise is so loud, when everybody's talking about an event, that's not the event that's going to mean much most of the time. Uh, that it's so advertised. And if it does respond to something, then it usually is a reversal, take the other side on a short term trade. It just depends on what it is. But this is way too well advertised, I think, from that standpoint. Yeah, I saw somebody about comments on my Microsoft comments last night. Yeah, I did say that all of these things were stretched, are probably going that the tech was going to bounce back, but you know, should get Wave Tech. Yeah, and I'm kind of going with Tony down here saying too much investment chasing, too little ROI. Yeah, I don't think you're not going to see massive QE, folks. That's not. There's no need for it. If there's liquidity being added, like buying of short-end T-bills and stuff like that, temporary ads, repos, all that stuff. Repos, by the way, typically are 2 to 3 day money ads. Sometimes they'll be 2 weeks. There's longer 30-day, but for the most part, all the repo stuff is 3 to 5 days, 2 days. It's real temporary. Most of that repo. Yeah. So yeah. Sorry, it's just a pain in the butt to move around on the screen. Yeah. So probably the BOJ thing. I don't know. It could surprise. I think it's just noise that people want to talk about, and the Japanese probably aren't going to affect the carry trade. All of that stuff is probably just too noisy. When I hear, that's why I keep bringing up the Bitcoin stuff. I mean, the noise is incredibly loud, and when they are advertising some joker that buys $1 billion worth of Bitcoin, is that a lot of money? Sure, to you and me. Is a lot of money to the Bitcoin market? Not at all. Um, we'll see. I still think you can go long Bitcoin when Michael Saylor, when they when they close down strategy, then that'll be a good time. Anyway, folks, um, yeah, thanks for listening to some of my plans for this coming year. It's a very interesting phase of life for me right now, just from the standpoint of going through a lot of major life change at this point. And you should know my wife was 20 years younger than me, so that's why I'm shocked that I lost her. I never thought there'd be a day of my life on this planet without her. That was not how it was supposed to work. But it's got me looking at a lot of things much differently. So I'm trying to make the best out of what she had to go through and endure to kind of bring me forward and help. I do care. It's interesting. I've always cared about my investment communities, whether they're institutional, or my customers and people like, I care about that. And I feel like I've done a lot of good work, and, and I want to solidify and get it into a form that is very usable. I wish I had the prodigy that I always wanted to have that could carry forward. I thought I had him once, but I lost him, and that's the way that went. But I appreciate everybody. So have a really good holiday. I don't talk to you before the New Year's. Happy New Year's. We're going to make 26 a really good year. I'm hoping to get to meet a bunch of you out there in the field. I plan on doing a few events here in the U.S., kind of warm-up events, and then the plan is London, probably London, Frankfurt. I've been looking at concentration of people around the planet that follow me, and probably Lugano or Milan. One of those two places will happen. Milan might be better. We'll see. And then ultimately after that, heading for Dubai. And so Dubai is always an interesting place. And I know I'll also get a lot more if I focus on analysis with crypto. But I think that, just in closing, that we're going to find out a lot in the next couple of years. Like, my questions are, I don't want the government in crypto. The government's in crypto. There's too many cross currents there right now. somebody has to be the big loser. Nobody can win big without some kind of catastrophic event. So if there's going to be a catastrophic event, it's probably a good time to wipe out like half of the millennials that are all bought in, and then ultimately resort this thing, bring some normalcy and some, I guess I'm trying to look for a word right now, just, some common sense. I mean, seriously, I want to say to some of these influencers, do you listen to yourself talk out loud? But I mean, if it's getting you clicks and you're getting, you got millions of followers, and you're going to keep doing what you're going to do until it doesn't. I get it. But, a lot of things aren't adding up for me, and we'll see. I wish everybody well. I'm not hoping anyone loses, so I'm right. That's not what I'm saying. I'm just saying a lot of things don't add up. Anyway, with that note, let's call it quits. Have a great holidays. Happy New Year. And I'll keep the Substack will keep going. So 2 things to stay in touch. Substack, kendallreport.substack.com. It's $8 a month. A full year, I think, is $80. It's $6.50 a month. And typically I do those Sunday. They come out on Monday morning, Monday through Friday morning. I usually do them around London Open. That's my favorite time of the day to trade, is during that hour before and 2 hours after London. So I'm trading and writing it while I'm doing that. So we'll keep that schedule for now, and then we come into year end. Like I said, I plan on trying to put some videos out that's going to break down how the channel is going to work, including a new podcast type format that I'm looking to put together. Have a great holiday, everybody. Enjoy, and I will see you in 2026, if not sooner.